All right, so everybody in the Metropolis Monthly community who's buying a house in 2023, if they're not going to sit on the sidelines, they're probably having to deal with high interest rates. There is a solution to high interest rates, and that is just using hard money where you don't have to lock in a long-term loan. So I was going to have one of my fund managers discuss climate of April in 2023 for private money and hard loans. Hello, Nicole. How are you?
Hi. I'm well. How are you, Chad?
Good. Have you seen a lot of activity in home purchases or investment purchases from your standpoint?
So there's been an uptick. So it was a little bit slow in the beginning of the year, but lately there's been a surge of purchases going on throughout the nation. I think everyone has, starting to realize that there was a dip in interest rates this week, but a lot of people are in the fence about purchasing properties. But the investors are understanding where the market's headed, and so they're grabbing opportunities while they can. And good program that's been utilized by most investors, or if not even first-time home buyers, is something called a bridge loan or a short-term loan.
Okay. You want to tell everybody what the purpose of a bridge is for?
So a bridge loan is really what it is. It's a bridge. It's a bridge to get you from this end to the other. It's short-term loan, usually a year, 12 months to 18 months or so, interest only, and it doesn't come with a prepayment penalty. So what I advise my clients and who's interested in purchasing properties that are a bit on the fence because they don't want to lock out a long-term DSCR loan, because that usually entails a 5-year or 3-year prepayment penalty, is to attain one of this or get one of these bridge loans just for a year. And we're all hoping that maybe by the year's end, interest rates will drop. And therefore, since there's no prepayment penalty, you can refi them out into a longer term loan.
So the benefit to using these type of loans is the underwriting is a lot more lax, right?
It's more lax. They understand that there's some blemish or so, financial blemish that took place. It is a lesser restriction. It doesn't even have to debt service. It could be a vacant property. It could be used for short-term rentals or Airbnb. It could even have a minor deferred maintenance, and you could still close this rather quickly.
Okay. What about the qualifications from the borrower standpoint?
So minimum FICO we've been noticing is for the most part is around 640 and above. Of course, the higher the FICO, your mid FICO is, the better leverage or the higher the loan to value lenders or funds can afford to give you. You don't need tax returns.
Okay.
Or perhaps 2 months or so, but it's really, really, really low qualifications to get a borrower.
This is one of those type of loans where it's really asset based. Your credit score plays a factor in the loan to value and the rate, but really most of the underwriting is just on the asset. You don't need tax returns to prove your income. These are stated loans. So the underwriting is a lot faster and easier than if you went to a bank to get a loan, right?
Sure, absolutely. There's some could even close within 7 days or 5 days. True private funds that perhaps it's a check writer who happens to specialize in that neighborhood or have an appetite for that community. We could wrap this up in 5 to 7 days without an appraisal.
Okay, so this is really for somebody that's trying to find a deal in the market right now. Maybe not everybody else is buying, but the prices are dipping like what you mentioned earlier, and someone might scoop that property up. Even if they're paying a high interest rate right now, if rates go down, they can always refinance, and at that time, the value of the house will probably start to go up. So using these bridge loans as a little device to acquire something, even if it's not the perfect finance scenario, might be the way to stock up your portfolio on these down times. Is there a certain type of property that you guys like using these types of loans for? A duplex, fourplex, multifamily, fix and flip? What do you like using bridge loans for?
I personally like using single family residence, SFRs, what we call it, single family residences.
Okay.
Condos, usually those tend to have an easier way of maybe finding a value within the area rather than, let's say, a multi-units. They are available, but it takes a bit more underwriting for us to look into or delve in it further. But SFRs, so that's an easy one. You mentioned something which We've been seeing, let's say, borrowers who may not qualify. The reason why they would use this short-term loans or bridge loans is, for example, if a borrower was in the market, is doing a purchase, had escrow open for 30 or so days, and after appraisal, he figured out the property doesn't debt service. So because they are in need of to close this immediately, they tend to switch it to a short-term loan, which allows you as if you are a mortgage broker to have more opportunities out there to, let's say, gather this loan and then perhaps later on give them a longer term loan.
And if you're the borrower, then that gives you another opportunity as well. And you mentioned debt service. Some people might not know what that means. So debt service is short for debt service coverage ratio, which means you have to make more than you spend. So if it's a rent house and you're renting it for $1,500, well, then your mortgage, your taxes, and your insurance and management, any other expenses you have need to be below that $1,500 for it to have a positive debt service. And your loans require a debt service to be positive or not?
That would be for the debt service coverage ratio loan, and that requires about a 0.75 or so. But for the short term or a transitional loan, you don't need to have a debt service coverage ratio.
Okay, cool. Well, being that it's April 2023 when we're going through this, what is the climate like for private money right now? What do you see the interest rates? Is there a ballpark between this range and this range on maybe a 75% loan to value loan right now? If you had a 700 credit score?
That's everywhere. Cost of borrowing money is expensive, and unfortunately, even the short-term bridge private financing is also affected. It is definitely a higher interest rate than what's out there, be it a conventional Fannie or a DSCR, but this is the cost, I guess, of getting this loan done in a quick manner. So interest rates for something like this would start from, let's say, 9.99 to, let's say, 12%, but it's usually interest only.
And it's really just short term, so you can buy the property and then put it into a long-term debt solution. Okay, well, thanks for going through that with us. Is there anything else about bridge loans that you would like to share with everybody in the 2023 inflation recession world that we live in? So
just on that note, because it is a bridge loan, the loan amounts really varies. You could have a bridge loan with a minimum of $100,000 to, at times, private money world could be up to $15 million. So the range varies. There isn't a cap. There isn't a limit in the city or county. There isn't a number for that. So Hope that helps out. It opens up multiple opportunities.
Yeah, it certainly does. Thanks for going through all this with us and explaining what a bridge loan is. I'll talk to you soon. All right. Until then, stay ahead of the curve.
You as well. Bye.
Bye.